Hi guys, welcome to Road to Futures. My name is HTrade and I am a partner trader of Wesley Trades HQ. Wesley Trades HQ is a completely free of charge trading Discord, and we provide information for free. We provide a strategy for free. We even took that strategy and we created a PDF document as well with that strategy there so that you can study it basically. And yeah, basically trade to get profitable at the end of the day, or trade and learn to get profitable. So long story short, this is just a recap video. I have not been doing well the past week, and I've literally steadily blown my evaluation accounts, both the 50,000 and the 100,000. So what does that mean for me going forward? So what I will do, or what I am actually doing right now, is I have opened a small Forex account, and I'm going to trade that Forex account until I am more steady profitable. And when I'm more profitable on that account, then I will evaluate or reevaluate and then go back into a 50,000 eval. So basically, long story short, it's back to a lot of backtesting for me, to be honest with you guys, because I've been hitting loss after loss, but I'm using exactly the same strategy that I've always been using. It's just, it's probably the market conditions. I don't know. I can't really blame the market for it, because the market, like anything else, the market can do what it wants no matter what my strategy is at the end of the day, right? Now, that is basically, yeah. So basically what I'm doing is I'm going to do a lot of backtesting, and at the end of the day, I am going to, during that backtesting, I am going to test the strategy that I'm currently running, right? So what is the strategy that I'm going to backtest? So basically, long story short, price must first break out of the current session that it's currently in, and then I look for direction. Now the direction is going to be based on the higher time frame as usual, but not only that, it's going to be based on where we are with liquidity levels. Now what do I mean by liquidity levels? It's going to mean something like this: previous week high, previous week low, previous day high, previous day low, and of course session highs and session lows. These are the most prominent liquidity levels that you can look for. For instance, take a look here. This was the New York session of Monday. Tuesday, when Tuesday come, Asian session took out the New York low, had a reaction, right? And then the London session took out the Asian high, took out the previous day's New York high, had a reaction. New York open, took out the London low and the Asian low, had a reaction. So based on this method, so this usually only works very well if price is in some kind of a range, right? So you get two states of being in the trading market, basically. So it is a consolidation or a range, and a trend. Like this day, it trended, right? One solid move going down, for instance, right? And the past few days now, I think at least the past week, price have been consolidating. So in this case, in this day, price went with a trend. right? So let me show you. So this is a trend. So going up, going up, going up, going up, until price starts consolidating in a specific range, like it did now, and then here going up, going up, going up. This is a trend, right? And this is consolidation. So sometimes you have to change up your strategy. You need to have a strategy for a trend, and you need to have a strategy for consolidation. Now, during this consolidation period, that's where I got stuck. But at the end of the day, the most important thing is we need to follow the higher time frame perspective. So in this case now, look at what's happening here. So yesterday, this is just a quick lesson on what happened yesterday. So, oh no, actually what happened on Tuesday, which is 2 days ago. So basically, let me just recap. All right. So Monday, we took out the previous weekly high. We closed inside it. Tuesday, we took out the previous weekly high. We closed inside it again, but this time with a bearish candle. And this is where this move started. So basically, this move didn't start on Wednesday. It actually started on Tuesday, this move going down. So, like I said, liquidity levels. Previous weekly high, very strong liquidity level. Previous weekly low, very strong liquidity level. We actually, in some brokers, we may have actually, we are at previous weekly low. And at the end of the day, the sell went off. We had, so far, we have a fib retracement of between 50 and 61.8. So basically, like I said, we need to follow the higher time frame at the end of the day. But we need to also have a good entry model. Now, my entry model that I have been using is an inverted fair value gap. Like this one, for instance. Okay, so it's a bullish. In this case now, it's a bullish fair value gap. But we disrespected that bullish fair value gap and we closed below it. Not only that, we also create a new bearish fair value gap as well. This is a very strong inverted fair value gap with a new bearish fair value gap in its place. So this is my entry model is basically retesting this and then going into that direction. Trade going into that direction. But I'm only going to trade inside London, and if I get a very strong trade in London, I don't have to trade New York, but during New York as well. Like in this case now, we took out immediately here, we took out the London low, but what happened? We respected the trend that started this breakout. So we sold off, we had a retracement, we retested this fair value gap, and then we sold off again. So my direction is going to be based on the 4-hour time frame as well as the 15-minute time frame must be in that direction as well. But now more recently, I have been studying the 1-hour time frame as well. Let's take a look at yesterday. Yesterday, we broke out of the Asian range during London, and we basically broke the Asian and the New York low. Yeah, we sold off. I started looking for a buy here, right? Which I actually got, which is not bad. But at the end of the day, this is bearish behavior. Why? Because there is a 1-hour inverted fair value gap with a bearish fair value gap combination. We sold off. We created another 1-hour fair value gap, retested this, and we sold off again. Bearish behavior, 100%. And now look at what's price doing. There's a bearish 1-hour fair value gap sitting here. We're busy tapping it right now. But not only that, take a look at the more recent structure. Price started going up, created an hourly fair value gap, respected that fair value gap, we started going up. We created another hourly fair value gap right here, which is bullish behavior. But this is on the 1 hour. On the 4 hour, it looks like we are tapping a bearish 4 hour fair value gap with no bullish fair value gap here in this move up. So on the 4 hour time frame we're bearish, but on the 1 hour time frame we are kind of bullish. And on the 15-minute time frame we are bullish. This morning actually was a very nice, there was a nice buy during the Asian time frame right here, because yeah, we created a bullish 15-minute fair value gap. Price started going up. We had a small retracement inside this whole fair value gap combination, and this is where we could have taken a buy after this retrace. And where would our stop loss have been? It could either be here or here, which is the beginning of the fair value gap move, the beginning of the 3-candle fair value gap move. And this would have been a very nice 1 to 2 risk to reward trade. Absolutely beautiful. So this is what I'm busy backtesting. I'm busy backtesting the 15-minute entry model with these kinds of moves. This does mean that I need to be more patient with my take profits and stop losses, but it is perfectly fine. This is I'm going to use this during the London time frame. And then the New York time frame is going to be a little bit different. I'm still going to respect the fair value gaps, etc., and the sessions. But for the New York Open, yeah, like I said, there's such a fine line. You need to watch for literally everything. The daily, the weekly, the 4 hourly, the 1 hourly, all these kinds of liquidity levels. This is all liquidity levels. So in this case now, yesterday, breaking out of the London session low does not mean that we are going to get a buy and go up and then take out the London time frame. What do I mean by that? Usually when a session low is broken, get a retracement, retest, go up. But yesterday just sold off. Because why? We were bearish on the 4 hour time frame and on the daily. That's why we sold off here. So at the end of the day, like I said, everything needs to be kept in mind. Every single thing. And I'm doing this recording just to explain to you guys, this is my journey. Once again, this is my journey to being profitable in the futures market. So even though I had to close my futures account for the time being, I'm still going to document all my trades and post it here in this channel to show you guys. Like I said, this is my journey. I'm just one single guy that's trying to make it in the trading space. And at the end of the day, the one thing that you should not do when you get a rough patch like this that I'm having right now is to give up. You should never, ever give up. You have to do some back testing. So if your strategy, like my strategy now, have given me issues, then at the end of the day, just have a look at your rules and backtest it more. If you have backtested your strategy in both ranging markets and trending markets, then you're good to go. But if you did not backtest it as far as you possibly can, all the information, like at least 1 to 2 years, at least, right? At least. Every year is on its own, but every year there's like big news events that happen. Like for instance, good example, COVID. Another example, the start of the Russian-Ukraine war. Another example, the US elections. Another example, the tariffs. You understand what I'm saying? So every single year there are these kinds of big news events that moves the market much faster in a specific direction. And that is what makes the market trend at those instances in time. And then when the dust settles, then price ranges a little bit until another news event happens. So at the end of the day, it is what it is. You will have to backtest your strategy in all market conditions. So that is the lesson that I had learned with me busting my evaluation accounts. All right, so let's get started. Like I said, this is only the beginning. This is literally only the beginning of the channel and the beginning of my trading career. So nothing is set in stone. But at the end of the day, like I said, one thing you need to not ever do when you do trading or when you try to make it in trading is give up. You should never ever give up, no matter the circumstances. Yes, you're going to use a lot of money to get started in trading. That is like paying tuition for a course that eventually you're basically building debt. Not debt in a bad way, but you're basically building this is your tuition that you pay to the market for learning how to trade it. That's the best way that I can explain it. So you shouldn't look at it like a loss. It's literally you paying tuition. It's you paying your dues to the market to learn how to use the market properly. And that's it. So yeah, I hope you guys have a good one today. Like I said, I need to do a lot of back testing, but while I'm back testing, I'm also going to trade on a small personal account, and I will definitely keep you updated on those trades as I do them on this channel. Thank you so much. Hope you have a great day. Cheers.